Guys, CPI data is coming out tomorrow and it is going to be a very, very big day for the markets. The current forecast is for around 5%, which is not that good. Normally 5% would be okay because we're trying to go back down. But last month we actually had 5% because we beat expectations. If we do not continue to go down, it's going to symbolize that we're kind of heading for somewhat of a more sticky inflation scenario, and that may give the Fed more of a cause to raise interest rates one last time, another 25 basis points, which could of course lead to many more banks going down or just much more fear in the market. I think it's important that you guys right now understand something that most people aren't talking about. Right now, the market is at a very high level. And the reason it's at a very high level is that it's pricing in the Fed doing rate cuts later on this year. Not staying steady, but actually having the rates be cut, which in my opinion is ludicrous because I see no way that's going to happen unless we go into a very, very bad recession, because of course the main job of the Fed right now is to keep inflation going lower and to not worry about jobless claims going up or people going into debt and recessions and all that type of stuff. They're worried about it, but their number one concern is to fight inflation. And if that means they have to keep the pain on longer because inflation is starting to get sticky and it's not going down to 2% very, very easily, guess what, everybody? That means the market is always going to come back down during that scenario. Now, how can you profit off of some of this? At this point in time, if the rate stays around 5% or if it's a surprise, you guys might actually look for some opportunities for breakdowns in stocks and crypto assets where you could be expecting the fact that, hey, we're going to be looking at a little bit more turbulence in the market. Some of these small breakdowns are going to be great for some of you guys that want to buy some options on the downward side. You've already seen a lot of big bets being placed on this. However, you probably want to wait for the CPI data to come out because we don't have all the same information as all the hedge funds that we've been talking about buying up all of these puts for the next few weeks. They can afford to lose a few $1 million. We cannot. So what I want you guys to take away from this here is, if inflation's still too high and it's above 5% tomorrow, there's a good chance that we may actually have another rate hike, which nobody's been talking about. If we are forced to have that other rate hike, things will get a lot more choppier throughout the summer, and where we might have had something more of a steady eddy sideways trend, we might start coming back down for a major pullback. Not all-time lows, not new lows, but a large pullback that may give you another opportunity to get some really big buy orders in. So if you guys have some cash on the sidelines, you guys can buy some of those dips here over the next few weeks, especially, well, months actually, especially if they were forced to raise interest rates because the 5% inflation rate was not broken. We had to stay there, unfortunately, and you guys should keep track of this as well. Keep an eye on how housing costs are doing and rent inflation. Right now, rent inflation has been going up every single month for like the last year and a half or so. If we can finally get that under control, I think we'll be much better off. But so far, we haven't seen that anywhere close to happening. So keep an eye on that one as well. Good luck tomorrow, everybody, and I'll be live to stream with you guys and have some fun, hoping that inflation finally goes down so we can afford some eggs and bacon. Thanks.